today, we've got all kinds of other opportunities. We've got online business opportunities. We've got at-home business opportunities. And something that you and I have talked a lot about lately are some of the AI opportunities that are starting to come up in this new economy as we're moving through that fourth turning that we talked about in the previous episode, and new institutions are being born. AI is a major component of that.
So here's the big question. How do everyday people like us who didn't grow up wealthy and were not taught how to be wealthy in school, how are we supposed to learn to think, invest, and grow wealth like the top 1% without compromising our ethics and our values? My name is Jeremy Whaley. That was my big question. This podcast will give you the answers. You're listening to Think Rich Radio.
Hello, and welcome back to another episode of Think Rich Radio. I'm your host, Jeremy Whaley, with my co-host, Nelson Bran. It's great to be with you today. Nelson, we're going to have a conversation that is near and dear to my heart. It's close to your heart. We breached the subject of decentralization in the last episode. And in this episode, we're going to talk about decentralized income. How's that sound for you?
It's brilliant, because all this time we've been touching on the why and potentially the how, but we haven't touched on the what.
That's exactly right. So we're going to talk about that. I think, folks, this is going to be the most valuable episode to date. So if you haven't liked and subscribed, like and subscribe right now. Go ahead and share it with your friends and your family, because they're going to want to hear this. And before we get into the meat of it, if you haven't checked out what Nelson and Brandon and Davey are doing over at deltachainlabs.com, go check it out. If you haven't checked out what I'm doing at trademaestro.com, go check it out and support us if that is something that you're interested in. Nelson, 14 years ago, I inadvertently created a model that you've seen me teach called the Financial Fortress. And the idea here is that if your financial world is like a Greek Parthenon, and you have the foundation at the bottom, and you have the Oedipus at the top that has all the little adorations, we're going to connect the things at the top and say that's our lifestyle, it's our standard of living. We're going to say the bottom is what creates the foundation. What supports the whole structure? And the answer is it's the columns in that Greek Parthenon, right? So I likened that to the cash flow that a person has coming into their financial world. And across the bottom, you have the foundation, and the foundation is your savings account and your basic spending plan and your gold and your silver and all the stuff that creates a great foundation, but doesn't actually necessarily create lifestyle. Most Americans, most human beings live with an incredible standard of living. We'll call it all the little adorations across the top, but they have one column supporting the whole thing, and that's called their job. And if that job disappears, what happens? The whole building comes crumbling down. But that's the way that 99% of society is conditioned to live. And so we conceived this idea that what if you had multiple cash flow columns? And the idea of a cash flow column is it creates income, and it is something that can disappear. If it can't disappear, it's foundation. That's solid. That's secure. But cash flow that you can use to pay your bills, create a standard of living, and it can disappear. That's the definition of a cash flow column. And we want to have as many as possible. And the term that I'm now giving that is decentralized income, where one income source does not create the entire structure. So that's what we're going to talk about in this episode, this idea. You're passionate about it. I'm passionate about it. And I'm going to let you go after I've teed it up for you. So take it away.
I love this subject. I love this subject because the only way to empower people, the only way to really people build is to let them know what they're capable of doing. And again, this is contrary to, that's why we're doing really a contrarian thinking project here. It's contrary to anything that the school system would teach, the university system would teach, or even an economic system would teach. So, and I told you before, my personal definition of an asset is something that pays me to own it. That allows me to look at things when someone will bring a project to me and say to me, Nelson, would you buy this house at this price, or would you get involved in this project that's a startup, or whatever, let's pretend it's a car wash. Whatever the project, I look at it and I measure it based on, is it an asset? In other words, does it pay me to own it? And again, primary residence is not that unless I'm renting out rooms. A primary residence is not that unless I've converted my 2-car garage into a couple of studios out of it. A private residence is not that unless I have an oil well in the back, or mineral rights, or water rights, or a detached house in the back that I'm renting out, or parking that I'm renting out, or something to that extent. If it's not producing cash flow, it isn't an asset. So
Okay,
that's
so
how
you're saying somebody's car is not an asset. The things that the bank would consider an asset, when you go in and you fill out your net worth and you say, well, I got this home on Galveston Beach or whatever it is down there, and I've got, these tractors, and I have this trailer, and I got the boat. You're saying those are not assets.
they are not, because they require maintenance, they require management, they require storage, they require registration, they require an oil change, they require gasoline, they require a driver's license, they require insurance so that when you wreck, you can fix it, on and on and on. An asset, again, pays you. So a car can be an asset if it's used for Uber or Lyft. A house can be an asset if you live there part-time and the rest of the time it's an Airbnb. So I'm not saying a home is bad. I'm just saying let's look at it for what it is. It is not an asset.
And so the other term we would give that is, you would say it's a liability. So let's do a little bit of bank accounting here. The way we were taught to do, and you're right when we say this is contrarian. The way that we were taught to do accounting is, if you own something that has value, it's an asset. We're going to stack it up with your net worth. But as I've said for years, a person can live indefinitely with no net worth, and they can be just fine. But a person can't survive even 2 or 3 weeks without cash flow. And the truth is, most people don't have a lot of net worth. They do everything with cash flow. And so if we flip that, that's the way the consumer has been taught to do accounting. But the way a bank does accounting is the opposite. A bank says, if I make a loan to somebody, they're paying me interest. So the loan that is a debt for you is an asset for the bank. And if you make a deposit into the bank, which you would call an asset for you, the bank would say that's a liability because it's something that they owe. So we're literally, if we want to think like the top 1%, we have to literally flip the script of how we define assets and liabilities. That's what you're saying, correct?
That's exactly what I'm saying. And I'm going a step further, and I'm suggesting that one of the reasons that the middle class is stuck, certainly the working class, but also the middle class, is because they have a primary job. And even if it's a great paying primary job, let's assume that pays $250,000 plus. It doesn't matter, because all that money is going into what? Into liabilities, into a luxury vehicle, into a second home, into 2 brand new. Well, what do people do when they get a raise? They go out and get a new car. If they get a substantial raise, they go out and get 2 cars. They take a vacation, they buy a boat, they buy an RV, they buy motorcycles, they get a timeshare. All of these are liabilities, even though my accountant may tell me, oh, no, Nelson, those are all assets. They're not, because I got to pay taxes on all those things. I got to maintain all those things. I got to store all those things. So I think if we stop thinking in terms of what the legacy system tells us is an asset or a liability, I think for the first time we can free ourselves from this hamster wheel.
Yeah, absolutely. And I'm going to give you an example, a real world example of somebody that I'm working with right now. I definitely won't mention their name, but this is a couple that's a little bit older. They're in their 70s, and they have 2 houses. One is a rental property, and they're bringing in almost $3,000 a month on that property. The mortgage on that property is only about $1,400 a month. They've had it for a long time. They have a ton of equity in it, like over $500,000 in equity. And the spouse wants to get rid of the rental property. Why? Because the house that they're living in, she wants to pay it off. She doesn't want a note to go with it. And I keep telling the husband who I'm working with, don't do this. This is the worst thing you can do. If you sell the rental property, which he's just absolutely committed to doing because the wife is so upset about it, if you sell the rental property, you're losing $1,600 a month in positive cash flow, plus you're building more equity over here in this property. Whereas the house you're living in right now, they've got I think it's like a 3% or 3.5% mortgage. The spread on that it's basically free money. So most people, though, their whole mindset is, well, I don't want to have any expenses. I want to own everything, and everything is just what we're self-contained here. But the way that wealthy people think is totally different. The wealthy person would say, how many of those rental properties could I get? I don't want just one. I don't want just two. I want 10. I want 20. I want 50. And as we've seen happen, especially in areas like New York, where it's become generational, rather than sell those properties when they need liquidity, they'll just take a loan against the property, pay off whatever it is they need, and then let the property continue to pay the loan back off. That is a formula that the wealthy have used for decades, that the middle class has been taught is a dirty formula.
It's interesting. I've been in real estate for a long, long while, and I thought it was for everyone. And I used to want to coach and teach people on how to get into passive income real estate. And I came to find that it's not for everyone, because people will complain about the tenants. They don't pay, they destroy the place, they clog the sink again, the water heater's broken, and so forth. And I would always say, well, that's a necessary part of that particular industry. That's the way it goes. If you go ahead and fix the item, replace the tenants, whatever needs to happen, at some point you're going to get a happy tenant. At some point, someone's going to treat that unit like a home. And it'll be everything you want, but you got to go through that necessary moment of patience as you finally find that perfect tenant. And so again, we're just not in that mindset of, if it's not easy, Nelson, I don't want to do it. I don't want the headache and so forth. But it's how we see it. If to your point, if that particular client of yours told the wife, said, honey, we're getting $1,600 a month. If we pay this house off, there's no money coming in on a monthly basis, month after month after month. How will it serve us to have no mortgage, but no money coming in? We're better off having that low interest mortgage.
Yep.
And keeping the cash flow coming from that income property. And I'll tell you what, let's get another job on the side. Let's get a side hustle of some sort. Let's do something to create more revenue to hurry up and pay the house off sooner. But let's not cut off this golden goose that we have over here. And again, like you said, Jeremy, the wealthy are thinking, how do I do this again? How do I multiply this same $1,600 situation over and over again? You said something also, if you don't mind, that I have to build on top of. The wealthy get a loan against their assets, and they don't care if it's BTC, gold, a physical property, a business, whatever. They don't live off the revenue that it produces. They get a loan off it because the loan is tax free. So even going back to your clients, if you spoke to them and said, listen, your wife wants to pay off the property, let's do this. Why don't you get a loan against that property, not for the full amount, but just for a chunk? Let's pay off $100,000 on that house. Let's satisfy her from that perspective, but let's not lose the cash flow from the property. That money is free because you're going to get a loan against the property, and you get to pay. Maybe you get a loan off the rental to pay the house down a little bit if that's what she wants to do. But my point is, then that money is free. That loan is free. Do what the wealthy are doing. We don't think in those terms.
Yep. Absolutely, 100%. So let's go a step further now, and I kind of breached this subject. What would the wealthy like to do? If the question of the show is, what is it the top 1% do that the rest of society doesn't do, and how do we do it without compromising ethics and values? Well, here's something that the wealthy have done for generations, that they've taught for generations, and generational wealth that has been created and passed not just one or two generations, but generation after generation. There's a pattern of what they do. Real estate and passive income, or whatever term you want to give to it, like what we just described, that's part of it. But the other thing they do is they decentralize. They decentralize their income. Now, in America, we've been conditioned that you go to school, you get an education, you get a job, and that's your career, and that's all you're good for. Outside of that, for your investments, you're going to go trust a financial advisor. You're going to trust somebody else because you're not smart enough to do that. But the one thing they really didn't teach us is they didn't teach us that you want to go decentralize your income. Now, there's two ways that we could do that. One way we could do it is go get 5 jobs. So you got you got your main gig, you got your DoorDash gig, you're delivering for Amazon, you're running an eBay hustle over here, but that's not sustainable. What the wealthy do is they do what we described in the first scenario, where they have a house and they're renting it out for positive cash flow. And then they roll that forward. I used the term, I said that the wealthy would like to roll that into 8 or 10 properties. But what's even better is if you could have 8 or 10 sources of cash flow that are diversified within. So you have 8 or 10 houses, and that's one of your cash flow columns that supports your financial fortress. But then what else could we get into? And like I've taught for the last 15 years, a lot of people like to get into trading in the terms of stocks and options and equities, which is great. I will say this, there's only a couple trading strategies that can truly be passive or semi-passive. Most trading strategies are actually just another active form of income. But today, we've got all kinds of other opportunities. We've got online business opportunities. We've got at-home business opportunities. And something that you and I've talked a lot about lately are some of the AI opportunities that are starting to come up in this new economy as we're moving through that fourth turning that we talked about in the previous episode, and new institutions are being born. AI is a major component of that. So why don't you talk a little bit about how somebody who might not have 500 grand to buy a rental property, how could they start creating the right kind of income so they can start diversifying at home?
I'm going to answer that with a broad statement. I'm going to come in it with, I call them the 5 Ds: diversification, divesting, de-risking, decentralizing, and defrosting your chicken the day before. Because if you don't, that same day, if you put it in the microwave oven, it comes out kind of chewy. Diversification, we know that we know what that is. Divesting is the opposite of investing. So divesting would mean that you take your daily, weekly, monthly profits, whatever they may be, your daily, weekly, monthly commissions, whatever they may be, and you remove them from that initial investment and you pay off a credit card. You make an extra payment to a car note. You pay down the house. The third one was de-risking. To de-risk means that you're taking that same money and you're going into another asset class. Like Jeremy just said, he pointed out precious metals, gold and silver, real estate investments, perhaps a particular business, perhaps in the S&P, something that takes you out of whatever that primary source of investment is. And then we talked about decentralization. To be specific, to decentralize means that you're getting outside of what is a centralized idea. A centralized idea is something we're very comfortable with, such as a bank, a financial planner, and everything that we perceive as guaranteed. A guaranteed return from a savings account of 1% a year, a guaranteed from a CD that's 4 to 5% a year. So in this case, a decentralized idea would be potentially a high-risk asset that's contrarian and outside of the centralized form. And that would be, say, an AI-related idea. It would be a new startup idea. It would be a bot idea. It would be something that is not mainstream. And of course, the last D, to defrost your beef the night before. I highly suggest it. I've made the mistake of trying to defrost it that same day and cooking it, and it's frozen in the middle. So there's that.
You just wanted a 5th D, and you ran out of Ds. Is that what you're saying?
I ran out of Ds, buddy. I just made it up as I went along. Should I give you that example of that real estate situation or not?
Which one?
The one about my friend that I just talked to, who's a realtor who just got done with a property that he fixed.
Yeah, in just a second, I want you to. But let's be very tangible here. Let's give some specific ideas. And this is not a specific investment advice for anybody. It's just to say that this is the way that the wealthy would start thinking. And so historically over the 20th century, some of these things I'm going to talk about were not available. But today in 2026 and moving forward, they are. And it's easier than ever to get into. So we've mentioned real estate. We've mentioned stocks and equities, which I'm a fan of, but it's not necessarily passive recurring income. Online business. Online business is one of the only places that a person can start with relatively little capital and really create unlimited income. That's what I've done. My biggest wins in life have come from online business. And we started my very first multi-million-dollar business. We started with $200. I mean, I think that's a pretty big accomplishment. I can go down the list of people who've done that. People have this idea that to run an online business, you have to go start an Amazon from scratch. That's not true. There's so many different ways. So let's call that a vertical or a cash flow column, if you will. There's other tangible. I'm going to be mixing these up. Something like storage units. We've talked about how Americans are so stuck on materialism that there's a storage unit at every exit. Well, okay. There's a market at every exit. Why don't you become that storage unit owner? That's a great idea for creating cash flow. We can get into franchises where somebody else creates that business for you, and all you're doing is you're investing in it. You can even hire a young MBA student out of school or somebody who thought they wanted to get an MBA and they decided that education was too expensive. They just want a real world, but they were willing to do the work. Get them as your partner so you own the franchise and somebody else is running it with you. What are some other ideas that we've talked about? We've got these bots that we're doing online now with AI. We've got AI agents that are creating online business and online automation opportunities. What are some that we've talked about that I'm forgetting?
There are node projects that coincide with the bot projects where particular nodes, let's say for a point of sale machine, a person would buy a node and assuming that a Walmart or a Target or a particular industry uses that POS system with a tap to pay card, when someone's purchased nodes, they'll make a profit based on how much usage that POS system gets with the tap to pay card. There are startups where it's a brand new cryptocurrency and at the moment it might be worth a few cents, but they're working on creating and building utility and purpose and demand for the coin. So you buy in at a low amount in hopes that at a future date it'll climb. So there's a lot of different projects. There's new ideas for YouTube. There's new ideas against Instagram and so forth. So it depends on where you want to go regarding the digital asset space.
Well, you did a great job of bringing some others in here. And what immediately the average person is going to think when they hear this is, oh crap, which one do I do? And then I'm going to say the dirtiest part of all, you do all of them, but you don't do it. And that's the key. People, all of us, I think, like our first inclination is I've got to do it. But the wealthy don't think that way. The wealthy think I own it and I employ others. I create a system whereby the system will pay me whatever the cost is for the people to run it. You get a car wash, you hire people to run it, and now you've got the profit off the top of it. That's how the top 1% think. That's why the top 1% get wealthier and wealthier. What do you say to that?
It's true. And actually, to your point, one of the reasons that I found when I was trying to help people own passive income on properties is that they wanted to necessarily manage it and maintain it themselves. So when they had a full-time job, every weekend they would spend on the property, fixing, repairing it, and changing it, remodeling it, and they grew exhausted from it. So therefore, it was easy to just want to let it go rather than hiring a property manager or some kind of maintenance manager to care for those things so that they can just enjoy the cash flow. But they weren't willing to pay someone else to help them do it. And I think that's one of the biggest things that the wealthy class are aware of, which is I can't do it alone. I'm going to ask for help and I'll hire the help. Simple.
We have to create leverage. So now I want to talk about, inside all those opportunities that I mentioned, some of them, buying a car wash, buying a storage facility, buying real estate, that takes a lot more capital up front. And one of the beautiful things we'll do in other episodes is talking about how cryptocurrency and blockchain is making it accessible through real world assets for people to actually get into those kind of things without having as much capital. But for this conversation, let's stick with the more traditional view. If somebody wants to get into real estate, it's going to take, several figures, either out of pocket or through a loan, to get into it. But then you look at some of these other things, like some of these bots that might appear risky, but it takes almost no capital to create as much or more cash flow as what some of these more tangible real world assets would have created. And you told me a great story before we started about your friend who got this real estate deal, and you were talking to them about one of your bots. So why don't you tell that story to our listeners?
One of the greatest inflows from one industry to the other that's occurring right now is brokers and realtors are going from real estate and they're going into bot-related investments. And they're doing it readily because, I'll just give you an example from my friend. His name is Jeremy, by the way. He was telling me that, not this Jeremy, another Jeremy. And so he was telling me,
brilliant guy. I'm sorry to interrupt. I'm sure he's a brilliant guy. We just have to establish that because all Jeremys are brilliant.
By definition. Yeah, that goes without saying. So this friend of mine said to me, Nelson, I finally rented out this house. Now, he bought this house because it needed work at $150,000. He put roughly, he said, $75,000 plus into the property, and he paid some mortgage while he did it. So it took him a year to get it all the way to getting it rented out by a tenant. And so he ended up spending, by his estimate, somewhere between $225,000 to $250,000. And it took him about a year. And after that, after the taxes and insurance on the property, he figures he's netting somewhere between $500 to $600 per month. So he felt relieved that the year was over. He felt relieved that he was done paying into the property to fix it. And he felt relieved that he wasn't going to be the only one facing the taxes and the insurance costs on that alone anymore. Now there was a tenant. And so I said to him, do you remember that robot idea that I told you about a while ago when I mentioned adaptive generative bots? And he said, Nelson, I told you then I'm not interested. I'm still not interested. And I said to him, well, I've now proven that this particular bot will pay out 0.5% per day, as it's done now for nearly 3.5 years. And he said, what? And I said, well, just think about it. 0.5% return per day. So that's on $7,000, assuming that's what you put in. That's nowhere near the $225 or $250 that you put into this property that took a year to lease out. But assuming you put $7,000 into this thing, that means it pays you at 0.5% return per day, roughly $35 a day. $35 a day multiplied by 30 days is $1,050 per month. And he said, what the, you know what he said? And he says, there's no way, it's impossible. I said, look, I thought so as well. And I'm in the real estate grind, and I know what it's like to find a property that's beat up and you got to fix it and so forth. So this is an absolutely entirely different world than real estate or anything that's realistic out there, be it a franchise, be it a mall, a mini mall or a corner mall that you buy, or a barbershop or a liquor store, whatever. In this case, these bots, because they adapt, they're generative, they adapt to human volition, volatility, sentiment. They have a disruptor capacity. They bet based on arbitrage. They have all these variables that they're able to make micro bets, about 100 bets for every minute. And so they're able to give a return regardless of the economy, regardless of whether there is a recession or not, regardless of who's president. They'll give that 0.5% return every single day. And so assuming that you say, well, Nelson, I'm going to test it. I'll do $7,000 for now, and I'm going to give it a whirl. I'm going to test it for 2 weeks or 4 weeks, or let's say 2 months. I'm going to park the money in there for 2 months. And if it proves to be what you say it is, then I'm going to do another 7,000. So 2 months later, you put in another 7,000. Now you're at 14,000 into this idea. So 2 times at $35 per day is $70 a day. But assuming that during those 2 months, the money was compounded, it was reinvested into itself, the daily return. So now the daily return is $83 per day. $83 a day times 30 days, that new sum per month is nearly $2,500 per month. $2,500 a month. And I told my buddy Jeremy, I said, in order for you to produce with your particular recipe, the way you've done this property, to produce $2,500 a month, you would have to spend 1.25 million in roughly 2.5 years, assuming you fixed all the properties concurrently, in order to generate that $2,500 a month. And in this case, I'm suggesting it's only $14,000. He asked me, what's the guarantee? I said, zero. I said, what's the guarantee that your property, your real estate is going to rent tomorrow? What's the guarantee that your tenant's not going to burn down the property? What's the guarantee that your tenant's not going to clog the tub every other weekend? Are there any guarantees in anything? In fact, I would suggest that you run a massively bigger risk by doing what you're doing and how you're doing it, because you're putting out there $250,000 for a return of $500 to $600 per month. That's less than 1% of 1% of 1% of 1%. You're running an enormous risk out there. What if taxes double again? What if insurance doubles again? Post-pandemic, they've done it. We're at 40, 50, 60, sometimes more percent increase since then. What's to keep that from continuing to occur? The only one who's running a risk asset is you. And he said, all right, what do I do?
All right, so that's a great story, and what I love about that is you're really giving a black and white, two extremes here. You're showing how traditional thinking says this is all I can get. It's a tangible asset. I can get my fingers on it. I can feel it. To look at something that's digital over here with these bots that I don't quite understand. I don't know how that works. But when you look at the results, you say, well, the results over here are 3, 4, 5 times better for less risk than what I would take over here. So we should all just put all of our money over here. Is that what you're saying?
I'm not at all am I saying that. And I would never suggest that, never.
What you're saying is you're saying decentralized. You're saying do all of it. You keep the real estate. You keep, it's a car wash if you have it. You probably keep your job for a while. And you add in something like the bots. And, we've got a couple different models that we're playing with, but it's not just that. Somebody could do something like getting into Bitcoin mining or other types of revenue generating activity that's automated, and you get as many of those running as possible. And before you know it, you got a flywheel that's going. And now if the tenant burns down the house, if the bot goes belly up, if something happens that blows up one of these sources of income, you're not sitting there saying, oh no, my life is ruined. That's what you're saying, right?
I do. You got the party rental store, you got the banana split selling joint, you got a few other ideas, you're good to go.
It's like in the show Arrested Development, there's always money in the banana stand. You remember that? Then he burns the banana stand. There was money there, and he had it stuffed in the walls.
That's right.
Okay, so somebody who's wanting to get started, let's make this tangible. Somebody who's driving in their car listening to this right now, and they're thinking, I don't know where to start. Number one, deltachainlabs.com and trademaestro.com. They can reach out and they can talk to us. I'll let you talk about Delta Chain in just a minute. But, if you guys are listening, you want to reach out to me, I can help you get started in some of these bots. I'll be happy to talk through them with you. Nelson will be happy to talk through them with you. We can show you some of the stuff we're doing. There's no guarantees. There's not guarantees for anything. If you want a guarantee, go get a certificate of deposit at the bank. And here's what I can guarantee you. I can guarantee you that you will earn about 6% less interest than inflation, maybe as much as 10%. But the money will be there when you come back. It won't be worth as much, but it'll be there. Or
as a rude statement, Jeremy.
I can guarantee it, though.
It's true.
Was that rude?
No, because you guarantee it, I guess.
I can guarantee that inflation is more than the bank is going to pay you. I guarantee that right now.
It's true.
Or, you guys, if you're listening, you say, hey, I want to learn more about this. Don't try to do all of it at once. I mean, if you have the assets to do it, you can certainly do everything at once. But you baby step. You take a step in a direction. You start with a bot, and nobody has to have $7,000, right? How much can they start one of these bots for to start seeing stuff stack up?
So the truth is that it only takes $120 to get involved. This is something that's intended for the masses. This is something that the banks have had for I would say decades upon decades. This is the reason why the banks have the biggest, tallest, most beautiful glass buildings in every single city all across the globe.
Yeah.
They have been making returns on our money that for the first time we get to do in a decentralized manner.
That's right.
So, but again, it's intended for all of us at $120 a person. I brought in friends of friends that are neighbors and housewives and plumbers and just regular people. And so everyone gets to participate. That's what this is for.
So anybody can get started. Somebody's listening to this at home. They say, I don't have the money to buy a rental property, but do you have $120? You can get started for $120. And Nelson and I can show you how we're using it, how we're helping other people do it. And we've got a few of these opportunities that are happening right now. And then as you start learning, you come over and let me help you learn a little bit about trading over at trademaestro.com. And then go over to Delta Chain Labs as you're immersing yourself into this new Web3 and start taking some of those courses. And Nelson, tell them, if somebody wants to come in and start with some bots and then they want to come into Delta Chain and start immersing themselves, where would they start?
First and foremost, we're following suit with the whole decentralized notion, which a part of the decentralized idea is that it's affordable, is that it's done in small chewable chunks. It's a university, but we call it an academy. We can't legally call it a university. It's not accredited. But we've made it at $150 a year. And we've done it and put about over a year worth of modules. And in this case, my fellow partners, Davey and Brandon, have put hundreds and hundreds of hours of work into this project where for $150 a year, it's an unbelievable value. But we want everyone to have access to it. As we move along and our audience grows, we're going to move up the price to $200 and $250, and it's going to go from there. It's my opinion it should already be $1,000 value. But right now it's at $150. And we're doing it to grow an audience and to be of service and to put value first. That's our business plan, is a value first idea to serve people. And the same can be said about the bot ideas, you guys, that we're involved in. They don't require a lot of money. The goal is to get the average person involved. And all we ask is that you have the slightest amount of courage, that you're willing to take a chance, because as Jeremy pointed out, there are no guarantees in life of any kind for whatever we do. If we want certainty, if we want guarantees, if we want surety and safety, these are perceived notions that aren't real. They're not real in anything. So take a chance, you guys. I was going to say give us a buzz, but follow us at deltachainlabs.com or at maestro.com.
Trademaestro.com.
Trademaestro.com. My apologies, Jeremy.
That's all right.
Take a chance with us. I'll tell you, Jeremy and I are going to start working a lot closer on these bot ideas, more than he even knows, because the goal, you guys, is to create a community that thrives, that we can help and shoulder as we move along.
Yeah, absolutely. Let's sum it up. DeltaChainLabs.com, TradeMaestro.com, and here's what people need to do. Get started. Get started building your financial fortress, building your decentralized income, build as much passive income as you can. You don't have to start with real estate. You don't have to start with stocks and options. You can start with as little as $120 and a bot that's automated. Then we've got multiple of those. You start learning, you start immersing yourself, change your environment, you change the people around you, you start to get different results. And before you know it, here's what I know. 5 years from now, you can look back and say, because of that one decision that I made in 2026, that one decision created a fork in my timeline. And 5 years from now, you can be living a life that maybe 10 years ago you dreamed you never could live. But I promise everybody can do it. Anybody can do it. And I know it. Nelson knows it. And I want you guys to know it that are listening. So thank you, Nelson, for having this great conversation with me. I think it's a very valid conversation. We're going to have probably a lot more of these. But those of you listening, If you haven't done so already, like and subscribe, follow, share with your friends, and leave us your comments. Let us know what questions you have. If you have a topic related to this that you'd like for us to discuss, put it in the comments so that we can see it, and we'll try to respond, but we'll certainly try to get an episode that's tied in with those questions. Any parting shots, Nelson?
Been a pleasure, my friend, as always. I'm looking forward to continue to grow this, and I'm hoping we can continue to do a daily podcast. That's the goal.
Absolutely. All right, everybody, have a wonderful day. We'll see you next time, and we'll talk to you.
Thank you all. Bye-bye.